And welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. And while attention focuses on Western markets, the most exciting fintech innovations are emerging where mobile technology, young digital native populations, and gaps in traditional banking converge. These regions aren't just adopting Western models, they're creating entirely new paradigms that may eventually reshape global finance. Today, I'm joined by Nadia Costanzo, Director of Banking for the Middle East, Africa, and Latin America at Wise. Nadia drives Wise's expansion across these regions by building banking relationships, securing licenses, and navigating complex regulatory frameworks. Her background is uniquely valuable. Before Wise, she worked with Kiva in Nairobi, facilitating microfinance across Africa, contributed to the World Bank's Universal Financial Access Agenda, and work directly with microfinance institutions in Paraguay. And today we'll explore how fintech evolves differently across emerging markets. We'll examine some challenges and discuss surprising innovations where traditional banking is limited. We'll also consider what these developments mean for established financial institutions looking to engage with these dynamic markets. So let's dive in. Nadia, welcome to the show.
Thanks for having me.
I think let's just put a stake in the ground and talk about what Wise's business looks like. Let's take Latin America first. What have you done there? What have you built there? Let's talk about sort of like, your story in terms of how you found a way to build a business there.
Yeah, absolutely. So Latin America for us is one of the most promising markets that we see, right? We have a few countries specifically where we're already operating in quite actively. Those are Brazil, Mexico, and then we have smaller operations to Chile, Colombia, Costa Rica, Uruguay. So we've been in the region for over a decade now, I would say, or around a decade. And the evolution that we've seen in that market is quite remarkable, mostly because of how those markets themselves have evolved. We've obviously seen a huge uptake of our product in the market. So in a place like Brazil, we have approximately 25% of the market share on all cross-border transactions, which is amazing. But what we've also seen kind of throughout that journey is the resurgence of lots of local fintechs who have been really changing the game for banks and incumbent financial institutions. And with that, also regulatory change, which has allowed companies like Wise to really, change things and enter those markets and offer, more importantly, really impactful services to customers in those markets.
And in these markets, are you a standalone offering? Are you partnering? Maybe talk about, are you competing against some of the fintechs in the region? Are you partnering with them? What is your role as a company within this region?
So in a place like Brazil, I would say that we were kind of one of the first ones on the ground offering a product that's really cross-border in nature. That has changed a lot since we went there, right? So that was probably around 2016. That's changed a lot. What we see now is actually huge potential for partnerships, right? We see local fintechs who are hugely focused on the domestic offering, but they also want to offer international products to a population who is also changing, right? You see incomes increasing in these markets, people who are traveling a lot more. And so they're looking to also go cross-border as well. So while they're focused maybe on the domestic products that they can offer, Wise comes in to offer this more international product. So what happens is that we have these partnerships. Now, partnerships has always been a part of our model. And it exists, still today in Mexico and Brazil and Chile, all these markets that I'm referring to. We need partners, right? We need to partner with the financial institutions to execute the payments, especially where we don't have local connections to payment systems, which is something we can hopefully talk about later. But that's somewhere where we need the banks. But more and more, we see the banks or new fintechs needing Wise, right? And so it's a really cool two-way kind of partnership where we offer something they offer something to us, and then on our side, we have what we call the Wise Platform product, where we essentially offer our rails internationally to allow for residents and customers in these countries to be able to, have multi-currency accounts offshore, right? Be able to do cross-border payments at a much cheaper cost and much more transparent. And that's all through partnerships. And we're really excited to see the likes of Nubank, Itaú in Brazil, right? These are some of the biggest financial institutions in the region partnering with us to use our payment rails. So it's pretty cool.
And Nadia, when you described Latin America, at least, you went country by country. And I think that's something that we've spoken about a few times on this podcast from different guests, that we talk about Latin America as a region, but each country is sort of a standalone. Can you talk a little bit about the dynamic of deciding to enter into a specific geography and what makes it ripe, I guess, for you guys to enter that market?
Absolutely. We tend to look at the markets by opportunity size, obviously. So what we would look at is, okay, what does this market offer in terms of, okay, is there an actual need and demand for this product? We're very customer focused as a business, right? So we're only going to go and offer products that are needed by customers in a particular place. Mm-hmm. So where we see that there's huge cross-border flows, we know that there's definitely a need for Wise, right? Because the benefits that Wise is offering by coming is offering a much more convenient product, right? If you're a fintech, and we can talk more about what that actually means in practice, but you're offering a product that is much easier to use than traditional financial services in these markets, which are very paper heavy, right? Paperwork, mm-hmm. bureaucracy, et cetera. Very costly, lots of hidden fees in the transactions, and just generally difficult to use. So again, so we're looking at markets where there's a demand. Now, we would also look at markets and in terms of, so before we look at the demand, then we see, okay, once we launch the market there, how much is it actually used, right? So is that demand actually equal to the reality? And then we would continue to invest further if we see that there's huge uptake. We would also pair that with kind of our understanding of the local market, right? So in places where there's a relatively open regulatory framework, for example, that's a country that we would probably want to go after as well, because we know that there's the demand paired with the openness from the regulator. So that makes it relatively ripe for opportunity, right, where we can go in there and operate. So I would say those are two of the main components that we would look into. We tend to go really deep in the markets that we operate in. That's why, you heard me talk about a few countries, and we're not in every single country in Latin America directly. But that's because whenever we choose a market, we really want to be able to ensure that we offer our whole product offering to the customers over there. And we will try our best to find a way to do that. Usually it will have regulatory implications, right? So we need to understand what are the licenses available, what are the regulations that would allow us to offer all of the different products. And it doesn't mean we would not pursue new opportunities just because we haven't launched everything in one market, but we really tend to be pretty focused on delivering as much as possible in that market.
It makes a lot of sense. You alluded to some changes in the regulatory regime in different countries. I know when we look at Brazil, in retrospect, obviously there was a perfect storm of, great market with regulators getting on board, moving to real-time payments. Can you talk about, I guess, some of the stories, the evolution of what's happening in the region around regulation and I guess the region's approach to being open and its openness towards fintech?
So the region has, generally speaking, and you look at a lot of these markets and they're also looking at each other's own developments, mm-hmm. right?
They're learning from each other. Yeah.
Exactly, which is really cool.
You go
right?
first. No, you go first. Yeah. Yeah.
And it's cool, right? Because you see how they're modeling their regulatory developments on mm-hmm. each other more so than always looking to, the global north, right? And so that's pretty cool as a development. And they're actually ahead of the curve in many ways, right? So I think with our two biggest markets, Mexico and Brazil, but you see this in also other markets, like Colombia has a fintech license available. Chile is developing a fintech license. And then, of course, Brazil and Mexico already have these fintech licenses. And these were both licenses that were launched in the last 6-7 years, whatever it is, right? Paired with the development of a local instant payment system that is open and accessible to these fintechs. So just by opening it up, you can just see the appetite that these regulators have for bringing in fintechs and fostering kind of the development of local fintechs, not just international ones, but also learning from them. And you essentially see them wanting to understand the experiences that fintechs are having, openness in consultations on regulatory developments, just a general openness to having a thriving fintech environment. More specifically, I think one of the coolest things on my journey at Wise, for example, has been watching how Brazil has developed, right? So, 6, 7, 8 years ago, in Brazil, you essentially had two main payment methods, and one was very much like the checks that we have mm-hmm. in the U.S., right? Which to me is mind-boggling that we're still using checks.
Very pesky, yeah.
but we had that, and then we had kind of a form of just like local payment transfers, right? So what was I going to say? So over the last few years, they developed this system called Pix, right? And that's an instant payment system. And what's incredible about that is it was launched in around 2019. And now, like, I think more than 70% of all domestic payments are operated through Pix. Like, Brazilians, they wouldn't understand why you wouldn't offer Pix. If you're a financial institution locally, they will be very confused if you can't offer Pix, right? And just the development of that, the usage of QR codes as well, the fact that you can self-determine your account identifier on your account, right? So I can get paid. It's almost like a Venmo, right? So you're using a banking system that becomes almost like Venmo, but that's
like a
instant.
unified address, I guess, identity.
Yeah, and you can, like, for example, in Brazil, you can choose up to, I think it's up to 5 different Pix keys is what they call them. I think it's 5. So you can choose email address, you can choose your phone number to be identified by, you can choose random keys, etc. So you can use all of this and then just get paid instantly, right? And this is through a banking system, right? It's not through some separate ecosystem like we have with Venmo or whatever, right? So that's just something that's been developing over the last less than a decade, right? And that's happening in Mexico too. You see the development of SPAY, right? Most payments are instant through SPAY, which is a local instant payment system. And it's happening more and more. It's almost like a domino effect that we're seeing across the region. And yeah, I'm super excited to see what's going to happen next, right? Because you're also seeing these countries develop really strong open banking, open finance frameworks, and I just think that you're going to see these markets becoming ahead of the curve very soon.
So clearly, fintech moves at a speed that's faster than the incumbent industry, and I'm kind of curious how you see the incumbent industry evolving along with the times as this regulation opens up. Some of these new the instant payment platforms go live. What is the role today, and where is the incumbent industry headed maybe in the future? I'll tell you why, because in the story in the U.S., we never told the story of like fintech versus banks. Our stories were always fintechs with banks, right? Like each one brings something that the other one doesn't have, and together they're better. In some cases, obviously, the fintechs can be outright winners, but for the most part, it seems to be like a collaborative model. How do you see that playing out in Latin America?
I would say it's pretty similar. And look, maybe in 10 years it'll look very different, but in what we see now, and is kind of what I was saying earlier, right? Fintechs still rely on banks for the most part, right? Now, of course, when there's a more developed system where you can have access to the local payment system, that's very different from the U.S., right? In the U.S., you actually need to be a bank to directly connect to the payment system, whereas in some of these markets, Mexico, Brazil, et cetera, you can actually, as a fintech, connect directly. So you can essentially cut out the banks eventually. I don't think we're quite there yet where, all fintechs can completely cut them out. There's still a component where we still need them. I also think banks are learning with the fintechs, right? And so, again, they will start seeing partnerships being more valuable, similar to the partnership that we have with those partners in Brazil, where they're using our international rails. But even for other purposes, right? There will be products that local fintechs will be offering that banks can't, and banks are changing, right? They're understanding more and more that fintechs aren't just like some pesky little like startups on the side. No, they're actually a real threat if you don't keep up with the times. So they're trying to develop stronger systems to kind of keep up with this, stronger APIs that, maybe fintechs can connect with or that other type of clients can connect with. But they're also developing, for example, their own fintechs, right? So you see this in Colombia, it's happening quite a bit, where some of the major banks, Bancolombia, Davivienda, they each have their own fintech arm, essentially, where it's completely separate from how the bank is actually operating, right? So it's two separate entities, but they belong to the same bank, right? And so you're seeing that banks are understanding, okay, actually clients want a more fun way to interact with financial services, but still secure and trustworthy, right? And I think that's where the banks in many ways still have an upper hand, right? Is that they're very established institutions. They bring that trust. They've been there for, in some cases, hundreds of years. And so customers continue to trust them. And maybe, you might not see all individuals wanting to, let's say, move all of their savings over to a fintech because they don't quite trust them enough, right? It might, look different at some point in the future, but I would say that banks are starting to change, and this is happening at a faster and faster pace, and they're starting to think more creatively as well because they understand that it's an opportunity for them.
Is there a model of like banking as a service or embedded finance within the region? And what I'm getting at is those types of partnerships where a fintech would need a bank, say with a lending product, I would assume, where they find a way to work together and take what each one does better and able to service their customers.
Yeah, it's definitely happening more and more. There are, in some cases, kind of regulations that allow it, and in some cases, regulations that don't allow it. So I think it's going to be something that's going to increase. And we'll see more of this kind of over time. And again, I think it's very similar to our Wise platform product, where we're just using each other for different types of services. And yeah, you're seeing this happening a lot in these markets.
And what's it like to build a startup in these countries? Are there ecosystems? Is it a lonely path? I mean, how receptive, I guess, is the local business ecosystem to starting, a fintech startup in these countries?
So, I think it's fine, right? Like I think what you're seeing is, for example, fintech associations that are present in most of these markets and that are developing more and more and that are gaining a lot more membership from the fintech community. And those associations are essentially creating a community of fintechs who can learn from each other. I think the worst thing that any fintech could do is work completely in isolation. So we do have to collaborate with these fintechs to have some form of influence on how the market is developing. So if a regulation is being issued that makes zero sense for how a fintech operates, there's more power in unifying and doing it together, right? So approaching regulators together. Obviously, we each have our priorities, and
right.
we're all maybe competitors to a certain extent. So there's limitations, but I do think there's a lot of value in working together on that. And then beyond that, there's a lot of talent in these markets, right? So it's actually like, when you go out there and you start hiring, you see not just the talent, but just this hunger for working on these kind of different, more innovative products. And people are super knowledgeable. And that ranges from anything from lawyers to engineers, right? And so I think the importance there is really building a strong local team and building a team who really understands the market. And this is more specifically speaking from an outside perspective. I think when you're building something inside, obviously that's kind of, it's kind of obvious, right? Like, we're going to hire people who understand the market. But I think if you're an international fintech who's trying to enter these markets, there's no one who knows the ins and outs of how to operate in these places like local people. Also because there's a lot of unwritten rules. And I think it's maybe like that everywhere, but you see this a lot,
right? You're just
not
not aware of them in your domestic market. Yeah.
Yeah, exactly. So there's like a very clear regulatory framework, but then there's also the murky nuances, and that is natural when you have a regulatory framework that's developing, is that there's always going to be lack of clarity over something within that regulation. And so hiring a really strong local team, I think, is kind of what helps you really break kind of the barriers and then really be able to figure it out. And I'm proud to say that we've built a really, really strong local presence. At least in Brazil, we have over 200 people in that office right now, and it's consistently growing. We're going to be hiring lots in the coming years. So and it's just really fun to see, wow, like all these people who are so passionate about improving the financial services industry in their market.
Yeah, I guess by hiring local people, you can also tap into mission, maybe a little bit differently than if you were just purely an international company coming in from abroad. One of the things you said, Nadia, also around regulation, it struck me in the sense that regulation feels to be rolling in the more open, supportive sense towards fintech, but obviously things don't move in straight lines. So the fact that regulation is in flux, that inserts a certain level of risk, I guess, into the model, right?
There's definitely risk, but I think it's risk that also the regulators are aware of, if I'm understanding your question correctly, because things can change at any moment, right? Usually there's enough notice in advance, and once you are a licensed entity, it's a lot easier to kind of get in the know of, or get the preliminary announcements, if we want to call them that, of how things might be evolving, how things might change. So I would say the regulators tend to be quite open in that. Now, maybe some of the risk could be more associated to, okay, you're enabling lots of new players to come in. What are other kind of risks that might arise? Like cybersecurity risks, privacy risks, et cetera. And I think globally, we're seeing a lot more focus on that in the last few years, developments of privacy laws, et cetera, and that's something that's ever changing. And yeah, it's just something that as institutions you need to keep in mind. Okay, how are you going to develop a system that's going to, be able to withstand cybersecurity threats, or that's going to protect the privacy of your individuals? So those risks are going to continue coming up, but I would say that the central banks and regulators have actually done a really good job at, putting really stringent security protocols in place for their own payment system, right? So to ensure that whoever's coming onto the system is very robust. And so, of course, that makes it very difficult to do, the integrations that are necessary and to comply. But I think it's a good thing, right? I think it protects consumers, which is ultimately what we want.
I've seen other markets like Egypt, with some of their digital banking changes, require partnerships with international institutions. Do you see that in any markets in Latin America? Meaning for a fintech to get a particular local license, particularly a banking license, they may need to partner with an international firm.
No, I don't think I've seen that in Latin America. It's actually probably the opposite,
right?
Yeah, I mean, again, you can come in as a foreign company and build a presence there, but they want to make sure that you're building a local presence by getting the relevant authorizations, by complying, by hiring people. So I would see it more actually as the reverse. Yeah.
And where are we on? I would like to switch gears and look at customers. So whether it's consumer or businesses, commercial. Where are you seeing growth in the region? Is this the underbanked, or are you capturing people who are banked and just moving to fintech? What does that story look like? For
Wise, I would say we're targeting mostly a banked community. Hopefully that'll change, and I'll explain why in a second. But typically, to use our services, you need to have access to the banking system. And while I do think that that's becoming easier in the region, obviously there's still barriers to financial inclusion, but you still, right now you still need to be part of the banking ecosystem. You need to have a smartphone, right, or a computer, right, because you need to be able to onboard, and that is all done remotely, right, and so you need to be able to do the checks remotely. And so in that sense, you need to be kind of tech savvy to a certain extent. We have customers of all ages, of all ranges, right, all types. And we really focus on developing our product and doing user research to make sure that we're developing it such that there's high accessibility of it. But, again, I would say that most of our consumers are people who already have access to financial services. And the reason why I say hopefully that will change is because I think with the kind of increase in fintechs in these markets, you're also seeing the ability to onboard, or for customers to understand how to operate within a more traditional or more formal, let's say, financial system rather than a cash-based system, is going to be increasing. So, I think globally there's a trend, especially post-COVID probably, but even just in general, where cash is becoming less of king. And, as I was saying earlier, you're seeing more people wanting to have that extreme speed, right? Like instant payments right away. They want to get access to their money. They want to be able to make a payment and not think about it again. And that's happening more and more. You're seeing cash reducing, and typically the people who are using cash are people who are kind of the unbanked. So yeah, hopefully that will change in the future as as kind of people shift away from the cash-based mindset. But it's still pretty present.
Makes a lot of sense. And this may be a tough question, but do you see opportunities, or where do you see opportunities for new players to step in or new products to emerge in the region? Not international money transfer, that's for sure. You guys got that wrapped up.
Yeah, there's no space for that.
Yeah.
Nope. Yeah, I mean, it's an interesting one. I think what you're seeing a lot more, but this is super hard to develop, is this focus on like super apps. So you see that a lot in Asia, right? And I think more and more you're seeing specific ones pop up in each domestic market, right? So an app that will allow you to offer all types of services all in one place. I would say there's that. I would say the region tends to be very credit oriented, and that's been kind of the success of Nubank, right? Like they've sold credit, like they basically have democratized credit for all of Brazilians, right? That's why you see the vast majority of Brazilians actually have an account with Nubank, and why you're seeing success in other markets as well. But
100 million customers.
Exactly, it's very impressive, right? Yeah. So you'll definitely see credit being a space where there's probably a lot of innovation that can continue to take place, and that there's clearly appetite and need for that for local consumers.
And I'm aware that Latin America is just part of your purview, but we're getting near the end of our conversation. I wanted to end with sort of asking you, like, what are your goals in the region? What are you excited about? How are you thinking about like the rest of 2025?
I'm really excited. So we got a license in Brazil last year, our second license in Brazil last year, to the payments institution license. And so for me now, I'm really excited that now we've done most of the work to, be fully compliant and to access the local payment system. It's like, okay, what other doors does this open for us over there? But more generally speaking, I'm just excited for us to really bring our global products to customers in the region, right? We've seen such big appetite in a place like Brazil for our account product. In Brazil, so globally we have around 11 million cards issued, and I think 2 million are in Brazil, right? And we launched cards in Brazil like 4 years ago or something. So you just see like, wow, there's such appetite for this. And I'm really excited to bring that to the rest of the region, probably starting with Mexico as one of the bigger markets. But, how can we bring that then to the other markets who I know that there's the demand, and more broadly, right? We have an assets product as well. So that's basically where we're allowing customers to put money aside and in a money market fund, right, and make a bit of a return. How do we allow that for local customers, right? Because that's a huge opportunity as well. So it's really like going back to what I was saying earlier, is how do we bring our entire product offering and really build something that's very localized and very strong for the customer base in the region. I think that's just, something that keeps me excited every day.
Nadia, it's been great talking to you. Thanks for joining us on the podcast today.
Thanks. It was really fun to talk.